Is Russ Koesterich, portfolio manager at BlackRock, at BlackRock's Global Allocation Fund. Russ, good to see you. Thanks for joining us.
Well, thanks for having me, Walford.
I wanted to start actually by talking about yields and the impact it's having on equity markets. I mean, we talk a lot about the nominal level in the 10-year. What, though, do you make of the real yield, and what's that telling you about the outlook for stocks?
So, if you look at where we are, rates are still extraordinarily low. Obviously, nominal yields have backed up quite a bit, but I think you're right in focusing on real yields. We still have the 10-year somewhere in the ballpark of a negative 60 basis point real yield. First of all, that is inconsistent with even the very low rates we had, both nominal and real, in the post-GFC decade. And second of all, it is very inconsistent given the type of growth we're likely to see in Q2 and Q3, given the massive stimulus that's been put in place. So our view is we're likely to see higher rates. We don't think rates melt up. The back end of the curve has already done a lot of work, but we are looking at higher rates. And as you point out, that has implications for the parts of the market you want to be in. One of the casualties of higher rates have been very long duration growth stocks, companies where you're not likely to see earnings for a number of years. One of the biggest beneficiaries has been the financial sector, one of last year's big laggards, an outperformer this year as yields have moved higher, the yield curve has steepened, and banks have gotten a bid.
So are you overweight banks and, I guess, other cyclicals, even though they've had a strong start to the year, the recent little mini pullback, a buying opportunity?
We are overweight. We've been adding to these. So we don't have an enormous overweight, but we have been adding to banks both in the U.S. and in Europe. We've been adding on the consumer finance side. Other types of cyclicals, adding some of the mining companies, machinery companies, both in the U.S. and Europe. And again, I go back to one of our high conviction views, and that is we're likely to see both nominal and real GDP numbers, not just for this year, but probably into 2022 as well, that we've not seen in years, if not decades. And part of what people loved last year, they loved the resilience of stable growth companies that could survive in a world where people were very uncertain about growth. This is a very different environment. And one of the themes we're really trying to make sure is in the portfolio is having that leverage to the cyclical rebound that is becoming more and more evident every day.
Shepard Smith here. Thanks for watching CNBC on YouTube.